I want to just spend a few minutes on a news story which could potentially have a large impact for investors in this space. So SEBI has put out a proposal that there should be a new asset class that will bridge the gap between mutual funds and portfolio management services. My colleague Alex is joining in, mutual fund show regular, on what this really means. Now, first off, Alex, this is a proposal, so it has to go through, the motions to actually come into being. And it's interesting because it's looking for the investor who has more than, say, 5, 10,000, 15,000 rupees to invest per month and less than the one who has 50 lakh rupees in a PMS.
Yeah.
What exactly is the proposal and why does it matter?
So, while they've called it a new asset class, Tamanna, I'm a little leery about calling it an asset class because traditionally we've looked at equity, fixed income, gold as asset classes. This is going to be a vehicle to invest in the same asset classes that mutual funds and PMSs invest in, which is primarily going to be equity related. Now, to the point of who's going to invest, well, yes, it is targeted at individuals that have a higher risk appetite than can be served just by the mutual fund industry. But it's supposed to bridge the gap, as the regulators pointed out, between mutual funds and the PMS, the portfolio management schemes, and the alternative investment funds, which have a minimum threshold of 50 lakh rupees and 1 crore rupees respectively. Now, who can launch these products? As things stand, the proposal is for the mutual funds themselves to launch these products. They will fall under the umbrella of mutual funds and it'll be a pooled product. Why is this important? It's very important because portfolio managers have a bilateral agreement with each investor. So if you go to a portfolio manager, they'll have an agreement with you, you'll decide the fees, they will use a demat account specifically for you and they'll have hundreds of other demat accounts as well. Here, it's going to be a pooled portfolio where, like a mutual fund structure, you will have a trust that is managing this overarching business. Now, it's two aspects that are very interesting here, Tamanna, and why you could see a major shift in the way things are done. I mentioned the bilateral agreements in the PMS. They don't use derivatives very extensively because of this structure, because if they were to use derivatives, they would have to use that and then apportion the gains into each demat account, which is not very easy to do. What the new structure is suggesting is that you can have long-short funds, for example, where the purpose is to use investments for the long term, a long-term portfolio, but you also strategically use derivatives to gain in the short term.
Yeah.
Or you can even go short on certain securities.
So more flexibility.
More flexibility, more efficiency in managing because it's a pooled fund. And the fund manager just has to do on that whole basis and the unit holders get a share of the total. The second most important aspect on this is where AIFs could lose out is the taxation structure. Now, it's been discussed quite a lot and AIFs are currently taxed as business income, your gains from that, and it goes up to 42%. Now, if this is in the mutual fund structure, there is no reason, and we were talking to a few CEOs earlier today, one of them very specifically said there is no reason to think that this would be taxed as different from mutual funds right now.
Right.
And so therefore, equity taxation of 10% applies on long-term capital gains. And so automatically, you will have a taxation structure that provides a significant arbitrage, and you might actually have people moving up the value chain from mutual funds, but you might very easily see a lot of people migrating from AIFs
out of
and PMS.
AIFs and into and PMS as well. You structure down, move down. All right, so interesting times ahead. Thank you so much, Alex, for joining in today and just putting that into perspective. We wanted to start with that because it's the big news story in the space that we wanted to address.